Right, ladies and gentlemen, let's now get going with simultaneous liquidations, and I'm going to give you some steps. I like these steps. They help you memorize what you need to do each step of the way. So let's go. First of all, you're going to close off the current accounts to the capital accounts. The process here is exactly the same as what you did for any changes in ownership. Same thing with the second step. Close off the drawings accounts to the capital accounts. Step number 3, a little different. Assuming you've got goodwill balance on your statement of financial position, you need to de-recognize that goodwill, right? Because upon liquidation, you will not receive any cash. You can't sell that goodwill separately from the business. So what I'm going to do is transfer it to the capital accounts. Remember, it was a debit balance, so therefore I will credit goodwill and therefore debit the capital accounts. Close off and transfer reserves to the capital accounts. Same as what we did in study unit 3. Here, however, in step 5, you've got a whole new thing that's going to be coming up, namely the liquidation account. Here, what you need to do is close off and transfer all the asset and liability accounts to the liquidation account. So property, land, your creditors, your debtors, everything will get closed off. So remember, assets have a debit balance. You will credit the asset balance then, right, to reduce it to 0. And if you credit the asset balance, you will debit liquidation account. For liabilities, your creditors, here you are going to have a credit balance already on the liability account. You will then debit the liability account to 0 it out. Where's the other side of the journal going to go? Well, it will be credit the liquidation account. Then you must record the actual liquidation of the assets. You're going to sell the assets and you will receive cash. Nice and easy. You will do this also in the liquidation account and in the bank account. Cash coming into the bank account, debit bank. Credit the liquidation account. Then you must record the payment of liquidation costs, auctioneer's fees, executive's fees, whatever. Okay? They get paid first. Anyone involved in the cost of liquidation, they get paid first. They get preference. Then you record any receipt of income or payment of expenses that are still happening while you may be liquidating. Okay? Again, through the liquidation account. Then you've got all your net cash available and you pay and settle the liabilities from this liquidation account. Remember, all the liabilities have already been transferred to this liquidation account. So here you will have a cash outflow, credit bank, and you will debit the liquidation account. Then close off the liquidation account to the capital accounts. You'll have a balancing figure. You'll add up the debit side and the credit side, and one side will be larger than the other. And you will balance it off by doing a journal to the capital accounts. You'll do that in the profit sharing ratio. Last, we will take these capital accounts and we will close them off by actually paying out the individual partners some cash. Nice and easy. These steps you must learn, and you must learn each process has a journal and understand where those journals go to the general ledger account. Very important before we get down to any homework examples. These must be learned, guys. Thank you.